What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money, investing in fractional real estate online, as usual. Um, if you saw yesterday's video, I appreciate all the comments on there and the discussion about the property and about this issue that I had brought up. If you didn't, we were just talking a little bit about how properties on Lofty are not always operating the same way as far as like when you're some properties, you can see this one, you buy just a couple of tokens, it moves the price quite a bit. Some other properties you can see, 50, 100 tokens get sold and it barely moves the price at all. I found out part of what the difference is in those two properties I was looking at is there's a huge difference in the what do they call it? The Oracle price that they set in their market maker. I think that has a lot to do with it. I think it also may have to do with the balance as far as like if there are base, how if whether there's a surplus or a lack or surplus or a deficiency. I think there's something else that they call it of base tokens in the pool. Um, and so those are two things that you have to get kind of in the weeds in the technical side of this to really understand. And so it does scare me a little bit, when it comes to trying to trade some of these deals. If the goal is to buy tokens and then sell them at a higher price, it's a little scary to count on that because, two properties that we do the due diligence on the property, the deals look pretty similar. They both, behaved the way we hoped they would. One price shot way up and I was able to sell tokens, the other one didn't and I couldn't. So, it was sort of interesting. Part of that discussion, somebody mentioned this Garden Gate property. It's one I could swear I did a video on in the past, although I couldn't find the past video. The price has moved a ton since then. And so I wanted to take another look at it. And because I couldn't find the old one, I think it's possible that it was one that I lost when I had some issue with my data and actually lost the video. I'm not sure, or I just couldn't find it because who knows, maybe I didn't actually put the address in the description. Try to do that, but I've definitely not done it on all of them. I probably need to go back and do that. Before I get into this property, though, there's a couple other things I want to talk about. One, like I mentioned, I really, really like the back and forth. I appreciate the people who are adding some insight to the properties. Somebody mentioned starting a separate Discord from the one that Lofty uses. Uh, I've already been thinking about this, and I've got one. I'm trying to work out what the categories are going to be. I think that I am just going to open one up, and maybe if you want to be invited to it, just let me know. Um, I want to talk about fractional real estate investing, like all the platforms, right? Somewhere where you can come, and if you have some Landa or have some, Arc 7 or any of the other property platforms, we'll have like separate channels for those. But I think, a lot talking strategy about lofty deals would be, that's where I spend most of the time. But I think it would be useful to have a place that, us owners could get together, talk about properties that we own or that we want to own, but that's outside of Lofty's control. Sometimes, when we start having discussions in some of the threads on their Discord, um, it feels a little bit weird to be either critical of the platform or maybe of the co-owner, whoever, there's a couple of deals now that are um, run by the same co-owner where there's basically, it's a very contentious situation where a lot of the owners are, um, basically battling it out with the actual co-owner of what to do about it. Uh, I think having the discussions about that, having some other place to have it would be cool. So, let me know if you want to be invited. I am just starting that up. Maybe it'll just be a couple of us, maybe more, depending. There's quite a few of you. I think that a couple people that watch this, and quite a few others that I just chat with through Discord, but separately. And so having a spot where we can, have sort of unsupervised lofty discussion, I guess, would be cool. If you have some different idea though about a better way to do it, I also was thinking about maybe just doing like a once a week Zoom call where we actually all talk to each other. If there's anybody interested in doing that, um, maybe not as often, maybe once a month. I don't know. My goal at this point for doing these videos, has sort of meandered from where I started, which was just trying to find some platforms to recommend to my real life clients, for when they didn't have quite enough to buy properties in real life. To I really see this as being the future of real estate, and just looking to connect with other people that are investing in this space, that want to see all the platforms win, right? I mean, it's right now I've really picked four that I'm putting money on. But I'd love to see, fees come down on some of the other platforms to where they actually make sense. Like, I think Arrived and Arc 7, and some of the others that I looked at could be fantastic platforms if they didn't just have, a ridiculous amount of fees baked into them. Um, and I'm sure there'll be others, but so, connecting with all of you is really the main goal. And then, for me, what I'm hoping to bring to the table is just some, 20 years of real estate investing experience and a little bit of extra, maybe due diligence knowledge. But, there's a ton that I can still learn, especially about other markets. A lot of these markets are places I've never been or haven't invested in, and about, the inner workings of the platform. Um, like I said, I mean, the liquidity pools still kind of baffle me. Somebody was helping me in the Discord, after I had recorded that video, but I think maybe before I even put it out last night. But sort of talking me through, that's kind of how I came up with the little bit of a theory I have and why they're working differently. Um, which reminds me, I am going to have um, I'm going to try to interview a co-owner, someone who owns multiple properties on Lofty. Somebody had asked me a couple weeks ago if there's, what's in it for co-owners, why are they doing it? It kind of seems like a bad deal. So some of the deals really seem that way. And so, if you have questions that you'd want to ask a co-owner, like I said, I'm going to interview one. He's someone who has multiple properties on the platform. I think he does a great job. So, it'll be interesting to pick his brain a little bit about what it's like to be on the other side of some of these deals. Um, but I think that's enough of the housekeeping type stuff. I'm going to just jump into this property. Like I said, it's 110 Garden Gate Drive in Harvest, Alabama. I don't know if this is one, if you've followed along in any of the Discord discussions on Lofty. This is, or even on Twitter too. Which, by the way, feel free to connect with me on there. Same name. I'm pretty active on there. But there's been quite a bit of discussion about, they took some of the funds that are in the operating reserve for this property and bought Bitcoin with it. Just $5,000, not a ton of money, but this reserve was getting close to $20,000. It looks like it's actually dipped a little bit when they released the property. But it's still a pretty healthy level. I mean, $17,000. It's a single family home. It was built in 2014. I think this is probably the biggest capex item that could come up sometime soon. It looks like, this is the inspection from when it was first purchased, but as far as I could tell, this condenser has never been replaced. I know here in San Antonio, once these things get to be about 10 years old, they're basically, any time from then on you could replace it. So, that's one big capex item that could be coming up, but it might, this is a list of things that were repaired after the inspection, but that's so I couldn't find, it's because I was trying to figure out, did they ever replace that condenser, and it didn't look like it. So, that's one big capex item. But I mean, the roof's only 10 years old. There's very few other big ticket items that you'd expect. So, I'm perfectly on board with doing something, not having to keep a super large um, operating, operating repair. What do they call it? Operating reserve. Man, sorry, it is late. Maybe I should have started to do this earlier. Not keeping too big of one or taking some of it, not dispersing it and investing it. I thought that's kind of interesting. I'm curious if somebody's looking at this deal as their mini Berkshire Hathaway. I don't know if you're. Yeah, this is going to be a rambling one tonight, probably. So I'm sorry about that. I am going to get into some of the details about this one, and why I think it's sort of interesting at this price. Um, But I'm wondering if somebody's thinking about treating this as their mini Berkshire, Berkshire Hathaway, where he would buy, he'd buy businesses, um, and operate and ended up buying other businesses within it. But like he'd buy insurance companies, and this is when I'm saying he is Warren Buffett. If you don't know who owns Berkshire Hathaway or who runs it at this point, he would buy insurance companies just for the ability to, because he could invest the float, basically invest the money that they had to hold to pay out their claims. This is sort of that same idea, right? Like trying to make an investment out of something that's just supposed to be a reserve fund. Um, I don't know. To me, it's a little bit quirky of an idea. Um, if they had a smaller operating reserve budget, I'd be really worried about it because you know, the price of Bitcoin fluctuates quite a bit, and so it could be way down at a time where you need that cash. But at the moment, that's even with the 5,000 out, and I believe that when they're showing this operating reserve budget, um, or the operating reserve, well, this is in November, right? So it's at 17,500. So they spent 5,000 out of that number, I think. So I think they still have $12,000. You can read through all the discussion about it. I think uh, that's how I came to that conclusion. But the number might not be exactly right. But what is this property? It's a 3-bedroom, 2-bath in Harvest, Alabama. It's just single family traditional rental. It's rented at $1,750 a month. When I first looked at this, and this was a while back, this was, well, I think I was even maybe further back. But I mean, at 40 or $50 at the time, um, probably somewhere around here, September, October, November, but somewhere around $40. There had been some dips, but at the time when I was looking at it, it was a little too expensive for me. And I'll show you a little bit of math and explain why. Um, so 1750 normally, at least in my market, people use the 1% rule, and that would mean that you'd pay 175,000 for this property. I think that is, especially on in a market like this one, and I'll show you a little bit about what I like about this market in a minute. But in a market like this one, um, I think that you can, pay a little bit more for each dollar of rent. So like, I think it's like here in San Antonio, you might, instead of using 1%, you might use 0.75% and still be pretty happy with it. So I've got that 1750 divided by point zero, yeah, 0.075. Oops. Oh, no, 0.0075, sorry. So 1750 divided by 0.0075, right? Because if this was a 1, that'd be the 1% rule, and so it's further. And that would mean I'd pay $233,000 for this property. Well, what is 233,000 mean? That would be, well, oh, I didn't actually do that number. But so that would be, so at $30 a token, you're talking about 200,000. So I don't know, maybe 31 or something. 31, 32. Well, let's see. Let me open this up and see. So let's see. 6645. That's how many tokens there are, so we're just going to divide by that. Should have done this one. So divided by 6645. So yeah, $35. Okay, I was way off when I said 31 or 32, right? So $35 a token. Just from a rent to price ratio that I would be comfortable with in a market like this, that's growing, that's a fast growing market. And so let me show you what I mean by that, why I like this market. It's Harvest, Alabama. It's pretty small. It's in Madison County, but part of the Huntsville Decatur combined MSA. Very, very strong population growth, but it's really easy to do that with a very small base like this. But so I looked at the Huntsville metropolitan area. I always hesitate when I say Huntsville because we have a town in Texas that is spelt maybe exactly the same, but we say Huntsville here, which is weird. And so I have to remember to say Huntsville, but you can see, so that metropolitan area has been growing very fast. You can look at the greater area actually they don't have the combined growth, which kind of bothers me. Um, but it's a market that's had very rapid growth. It's a landlord friendly market, which is something that I like. Um, there is a decent amount of new construction, and so you haven't had a huge price. Like you can actually see, like this year in that market, the average price is down. Um, this sort of trend is very similar to what you see in San Antonio, and it is, in my experience, it's been because we have a lot of new construction that is smaller, and so it's bringing down the median sale price, because builders switch to making these smaller homes, smaller than our existing ones anyway. And they get to keep adding homes, and they have a lot of inventory to sell out. So we've had these sort of flat prices where we are. Um, if you look at just like median, this is not looking at if you had the same house, would it sell for more or less? So don't be fooled by that. But this I sort of expect this basically in a market where there's plenty of new construction as well. Their one year forecast though is still slight growth, right? Almost 3% growth, even though over the last year it went down a little bit. I think in the long term, though, I'd expect this to to be a market that would do really well because you just have this, continual growing demand. And so, the supply side won't be able to keep up um, forever the way the builders are. And, a big part of why they're able to do that and then sell out these cheaper homes is because a lot of people with a very low mortgage are not selling their existing homes in the way that they used to. Um, and so you don't have so the builders are competing in a weird way that we don't always see. And so, at the moment, median home prices are behaving really weird in a lot of these markets, and this is one that I'm, very similar to the one I'm in. So I'm not surprised by it, but it is a one of the risks, right, of being in a market like this, even though you have incredible population growth, is that you can have supply growth too, right? But I think overall, I'd take the growing market over, even with some ability to add new units. I'd take that any day over, a market like Chicago where we have a shrinking population. If I'm looking at a long-term investment, which is what I would be looking at it for. So all that just to say, um, because of that, I think that it is a market that I'd want to be in long term, and so uh, and willing to have that little bit lower rent to price ratio, and then especially when you add on top of that that you're getting a discount in the price itself, right, relative to what it should sell for. And so this was an interesting one to me. Um, I couldn't find an appraisal in the documents, and I'm curious if this came to the platform just using House Canary numbers because there's a lot of House Canary uh, reports in the file, but when I opened the documents, I couldn't find an appraisal anywhere. And it's perfectly possible that I just missed it. Normally, you have a link to it. I didn't see a link to it. I opened the document thing. I didn't see it. Obviously, I could have very easily missed it, but um, normally I'd want to dig into this because, so if you look at, House Canary at $49 means that this property, they think it's worth 326,000. Is that right though? Wait a minute. Let me look at the financials. Yeah, why is that though? Because it came on the market at $50. And then that should be, I wonder if there's more. Okay, let's do some math because that's a little bit weird. Um, I love doing math on here. Oh, I think I already did this one of the getting ready for the. So at $50 a token, um, you get to 332 to 50. So it seems like that should have been what it was brought to the platform at. It was $50 a token, but it's not. Hmm. Um, I'm really not sure what's going on there. Uh, I must have missed something. Maybe at some point they did a dilutive capital call. Let's see if that. Well, I'm not going to scroll through all those. Maybe if somebody else owns this and they know why that is, it's strange to me. Um, but if it were $50 a token, you'd be at this 332. But I looked at all the third party sites that I normally do. I like this homes.com one. It's one of my favorites, but in this market, it's giving you a range. Uh, that's a you know I also looked on Realtor, Redfin, and Zillow, and I got a tighter range between 280 and 289. So took kind of the average of that. uh if we bought it at $43 a token, that'd be 285, right? And so we're trading right around $30 a token right now. That's just under 200,000. So you can see you're getting a considerable discount at $30 a token to what I think the probable real world value is. In this case, when you have Realtor, Redfin, and Zillow all so close to each other, and Homes.com giving you a range that wraps around it, it's really hard for me to trust this house canary number. Especially when you look at this market. This was just to show you, like, how far you are from actual Huntsville, because it is it'd be an 18-minute commute if you're going downtown. So I don't really know what their traffic is like. If I were going to put a bunch of money in this, that'd be something else I might look at. Um, but when you look at this is just a relatively new construction home in a subdivision of a whole bunch of similar homes. This is the type of area where I just trust the third party platforms quite a bit, because Realtor, Redfin, and Zillow, all of them truly all of all the sites tend to have the most problems when properties are very different in an area, right? Like if you're in an older area where there's just a ton of variability, sometimes you'll just get some wild numbers out of them. But in a place like this where they have basically the same property over and over again that they can use as a comp, usually they give you really tight numbers. And so I tend to believe that. I'm really curious why House Canary is giving such a, why there's such a big discrepancy. Um, but even at the price today, right? I mean, now it's going up. It's moving, right? It's 32.86. I actually did buy some today at like 31. Yeah, 31.27. I bought 10 tokens right before I started recording this. I think at this price, right? At 31.27, I'm okay. I've passed over the 200,000 mark, but I'm still getting a decent discount. I'm getting an almost yield at that price. Um, Relatively new property in a market that's fast growing. Like, for me, that's an interesting deal. At $40, I wasn't excited about it at all. I wasn't getting any kind of discount. The yield was, significantly less, relative because of the higher price. But at $30, I think it makes a lot of sense. And so one of the problems is that I think, what a lot of the lofty properties have is that, when you talked about the rental price ratio, and I said, okay, that gives you maybe 233, right, is what I'd want to pay, or somewhere around there. Um, there's a bunch of the properties that were brought to the platform that people clearly didn't think about this at all, right? And so, like, if you don't have, it's tough to get the types of yields that you'd want to get if you have a rent to price ratio that's, if you look at it. So let's say we look at it compared to the 285, right? So if you're getting 1750 divided by 285,000, yeah, you're getting a 0.006, right? I mean, to me, this is way too low. Like, I can buy brand new construction here in San Antonio, um, get a great rate on it, right? I mean, these are obviously not, there's no financing involved in this lofty deal. But if I were buying one here in town, and I wanted to just go buy my own, um, get a fantastic rate, because the builders are buying it down by a considerable amount. Now, you wouldn't get this quality of construction. This is actually a nicer home than what I'm typically buying as investment properties here, or helping clients with. Um, but I mean, this number is just to me, that's just way too low at the 285, and it's certainly too low at, well, and it was at over here. Oop, where do we go? Um, at the 292, right? I mean, to me, that's just was way too high of a price to pay to use this as a rental property, right? Like, not every property makes sense as a rental property if you want to like maximize your return, right? Because what you end up with on this one is kind of a, a relatively low yield. Um, but I mean, that is what it is. But it's when you get that and you combine that with, okay, well, so now we're getting to buy it at significantly below that price. So it boosts the yield and we get a discount. So all of a sudden that makes a lot more sense to me. The other couple, I did the other couple other due diligence things where I checked the national risk index. If you haven't seen a video where I've done that, relatively moderate risk, but you can scroll through and see, what they do have, whether it's cold wave, earthquake, what the chances of different things are. You can dig into those. I actually like to use this one. Oh, does it not change? Yeah, you have to change it over here too, to get better details. So yeah, if you haven't seen that, I like to use this in a market. I've been through here quite a few times, but I've never actually worked in this market, and so wanted to figure out that stuff. Looked at the flood map. Wasn't any surprises there. This was not a flood area. Also looked on Rentometer because even though they rented it out quickly at 1750, so I wanted to check that out, and that does seem like it's the median rental rate. Like, maybe they could have pushed it a little bit. I don't know. But it rented quickly, uh, and the turnover here was actually really easy. That the property was in decent shape, so the manager, even though a lot of people don't like this manager, this is Home River Group. Apparently, in this market, they're doing a decent job, right? Like, they put a tenant in there that took pretty good care of it. The turnover went relatively smoothly. They had not a ton of money spent, and then they got it rented again. Um, I didn't actually go and count the days. That's one of the things that I like to do, is really, okay, yeah, they even pre-listed it, I think, before the tenant moved out, which is fantastic, right? So, there's a lot of times you're not seeing that, with a lot of the managers on this platform. Um, and you can do it. You can do it if you have a property that has a tenant in it that's cooperative and keeps the home nice. It's really tough to do it if you're not, right. And when they say pre-listing it, I'm assuming they mean before the tenant actually moved out. But I don't know. I didn't dig into the history of it that much. Uh, you know, it is, to a certain extent, if I like the property and the market, the current tenant isn't the biggest deal to me, right? As long as I believe that the rent numbers are, market rent, right? So they're not like paying an above market rent. We're not going to be able to replace them. If I'm looking for something that, I don't think this is one like I was talking about last night where I'm going to try to push to get this sold real quick, even though it does come at a discount. This is one where, um, you know, because of the market, I won't mind holding this pretty long term. It'll pay a little bit of rental yield along the way, hopefully. I noticed I couldn't stake any because it's maxed out, which is one thing. This seems like a really small amount of tokens compared to some of the other pools, and I'm curious if that has anything to do with why the prices move so much. If the size of the pool affects it. I really don't know. That's something that if anyone has more insight into that and they want to share it, um, especially if you'd like to come on here and talk about it, I'd love to hear that. Um, but I think that's one of the things that can't do that. But so get it. It is kind of funny. I've gotten, I think a normal person looks at a 6 or 7%, current yield, and the a discount and the aspect, or the potential of getting appreciation over time. and would think, oh, that's a fantastic deal. I'm just used to, some just really incredible deals, both in, in my day job, the stuff that we try to find for clients and the stuff that I've invested in real life, but also too, I mean, just being able to find fantastic returns on some of the other deals, but where it's just because we're getting a really big discount. But I think that if I were just looking for something to buy and hold, which is not at the moment what I'm mostly using Lofty for. I'm using, I think that Mogul is sort of a better solution for that. Um, which I do have a link in the description below if you want to check that out if you haven't. But again, do your own due diligence on that platform and on this one and on all these deals, right? I mean, just because I like that one better doesn't mean it's the right fit for you. It doesn't even mean that they'll be successful, right? I mean, it just early indications make me believe that. But a deal like this looks pretty good to me. Especially where you have this just huge variability in the price. Like I've just bought 10 tokens, figuring one, whenever it puts it, it puts it on my account page, and I look at this pretty regularly. And so, that's why, like today, there was a decent dip in this one that I had owned. And I have a high cost basis. This was one of the earlier ones before I really figured out what I was doing on Lofty. But I got some at 34 today, and it's at 38. But so I like to look through here, set my alerts up too, but and see when there's dips, and then just go in and pull the trigger and buy more. So I found that like if I already own some of one, um, I've already done the due diligence. I'm already getting alerts on different things that are happening, or any of the updates. Which reminds me, though, I do have to set my little alerts on here. And so that's what. Oh, I already have this open. I should just click those two little things, and then now I'll get emails when the prices move a lot. It's probably one that I'll pick up more at, especially if it goes back down to 26 or something. And then, I'll if it goes back up to the 40, then yeah, about, if it's in a short time frame, maybe I sell that. But, if this is one that, because it's, what makes this a lot different from the Chicago properties is this is a market I'd really like to be in long term. I'd expect it to continue to improve where, on the current trajectory, I don't know that the same is true there, right? So I've just made a choice about what types of markets I want to be in and the types of deals I want to do in each. And so, again, just because that's my choice in those two doesn't mean it's the right answer. I am curious what other people think of this one. If let me know, do you think the fact that they're using the reserve to buy Bitcoin is that, and then somebody proposed a vote to switch it to Algorand, which I thought was funny. The reason that's really funny to me is we can, we have it, it's so easy to convert your daily rent that you've received to Algorand. Like it's like two buttons on, in Lofty. So like if you want that, just use, just turn your rent into that. I don't know, that seemed weird to me. But so, do you like that the other owners in this property are doing stuff like that, or does that kind of scare you? Because to me, it's a little of both, right? Like you have some active owners that are thinking, trying to do some stuff, but at the same time, I don't know that, when I have reserve funds, I want them to be in a currency that I can use if I need that money quickly. Now, like I said earlier, they have what I think is a pretty substantial reserve for a property that appears to be in decent shape, like especially when we have access to the universal lending DAO, if anything really bad happens. And so, um, I mean, you'd expect to be able to handle most turnovers and most unexpected repairs with the 12,000 or whatever amount that they have left after doing that. So I'm not too turned off by that, but if a whole lot more tinkering happens, then that starts to scare me, right? If they're trying to do, I mean, who knows, right? Like maybe next week we'll try to use some of our reserve to buy some of the other property tokens, right? I mean, I don't know. So that seems a little bit strange for me. But yeah, I just want to talk a little bit about this one because somebody had pointed it out. It is another one where that price is just moving a ton. I mean, you can see, my $10 purchase moved it like over $2. And it's actually 32.86 right now, even though my transaction was at 31.27. But like even, one or two token transactions are making a pretty big swing. So um, definitely something I have to figure out. I think, I honestly believe this is a feature and not a bug of Lofty, for me, because I'm actively looking for deals, trying to get the discounts. Having a property price that just swings wildly, when I know because I'm not putting money on here that I will ever need in a hurry. So like if the property prices tank, I'm just going to buy more of that. Or if the token prices tank, I'm just going to buy more of it. And then at some point, maybe, get together with the other owners and push to sell it. And then, we recoup the money that way. Um, if they go way up, well, then I just sell, right? Like, I mean, so it's tough to having that wildly moving token price only can only hurt you if you're forced to liquidate your tokens at some point, right? But if you're not, as long as the real world asset price is always there, which, isn't a given. I mean, there's a risk of that, but as long as they're not, as long as that stays there, and that's why we're doing, that's why we're paying a lot of attention to the market, paying attention to the asset, doing our due diligence. And as long as we're right about that when we're picking properties, it's really hard to get hurt here, and that's what to me the biggest risk is the platform risk, right? Like what happens if something happens to Lofty or any of the platforms, right? Mogul, Ground Floor, Sol's Lot, any of the ones that you're on. Some of them have better answers to that question than others. Lofty is one that I think that it would be really difficult for all the owners to get together and do anything. um, but I also, I realistically, what's that risk today? It doesn't seem super high, but I don't know the inner workings of their company. Um, but it's part of the reason why I'll never have all of my net worth on any one platform, and why right now I'm really very much still experimenting. But it is, so I think I've probably said this a bunch of times on this channel, so sorry to repeat myself, but it is, if we can eliminate a lot of the real estate risk, um, there's just some fantastic deals. And like this to me is, if assuming, and if before I put a ton of money in this, I'm going to dig more into this value, right? But uh, this is a really tight range, right? And so assuming this is pretty good, uh, we're at a big discount to the real world value already. Like not the same kind of discount we're talking about on the Chicago properties, but we're doing it in a market where I don't think there's any risk, or I think the risk of long term these going down in value is significantly lower than those. Especially because it's a newer product, and so we're not worried about functional obsolescence here. It's a pretty good size home. It's a 1,700 square foot home. It's not like, there's a lot of this new construction that's coming out that's cheaper. It's like 11 and 1,200 square feet. I think it's selling really well because it's affordable, but I think that as soon as people can go back to buying the bigger homes, I think a lot of people will, even though, maybe many of them would be better off with a smaller property and more affordable. It's just the way that most home buyers operate. Um, so that is just my cat knocking stuff over in the kitchen. So I guess it's been more active these last couple of days than in the past. Twice in 2 days that I've had to interrupt my video. But anyway, I think that is really it for today. Please do keep the questions coming and comments. Love to know if you're invested in this, what you think about it. If you have other insight into, um, did this come to market at $50 a token? Like the math just doesn't seem to work for me. And did they add tokens at some point, or what am I missing? That's one. Uh, but also, anything else that you want to share about the market itself, about, that's what I'm really here for. I'm very interested in, sharing some insights and hearing yours and whatnot. And also too, like I said in the beginning, if you're interested in joining the Discord that's separate from the main one that is put on by Lofty, and then we talk about other platforms, talk about strategies that we don't necessarily want to share with it. the whole regular Discord or whatever it is, feel free to reach out. Let me know. I am just tweaking the categories and whatnot, and we'll probably have that up and running in the next couple of days to invite some people to. That is it for today. Until next time, you know the thing. I am going to keep making mistakes. Man, my brain is just not there. I'm going to just keep making mistakes so that you don't have to.